Speaking at a press conference to announce the monetary policy rates, Dr. Addison explained that the number increased from 15 to 19 due to improved capital status of some of the banks. Even though he did not disclose the names of the banks, the governor was optimistic the books of these banks look good, hence will enable them meet the capital requirements.
In terms of the progress report on the recapitalization exercise, I think we have seen further improvements in the numbers of banks that are probably going to meet the 400 minimum capital requirement. If I stuck my neck out on 15 banks as of the last MPC, maybe I can stick my neck up for 19 banks at this round of MPC. So there are improvements. We are beginning to see more and more banks, being likely to meet that particular minimum capital requirement. Obviously, I'm not going to give you names of any banks.
Commenting on the number, banking consultant Nana Otuo Champong was hopeful the number may increase again as the deadline gets closer. He maintained that some banks with strong financials but unable to meet the requirements will finally opt for mergers, leading to an increase in the number.
Right from the onset, the governor said we're starting with 36, and I think industry players like ourselves were not expecting us to end with 36. We're looking at 20 plus or minus 3 or 4. So if you end up with 24, 25, then it should be okay. So it's good that the update has increased it from 15 to 19, and it's only 3 months, less than 3 months to go. So hopefully we'll get the target figure. Yeah, there should be another 2, possibly 3 measures to happen before we get there. But the good news is because of the S&P's rating, the confidence in the economy is returning, and so foreign investors are also ready to come in and invest. And so some of the banks, they've already lined them up, but they were waiting for a bit of good news to come. And with this plus the decision to maintain the rate, I'm sure they will come.
Meanwhile, Dr. Addison refuted assertions that the Bank of Ghana should be blamed for job losses since proper plans were not put in place to cushion workers who were sacked after the revocation of licenses of some 7 banks.
The question about the cleanup and job losses, that's the question I missed. I think that we need to understand this issue better because all of the jobs in that sector were at risk. How many people did you have in that sector? 5,000? 4,000? These were banks that were literally heading towards collapse. What would have happened if the Bank of Ghana had not intervened? All of those jobs would have been lost anyway. So we came in to save those financial institutions from imminent disaster. I think this is the way you should look at it. The Bank of Ghana's action in coming in to take care of banks that were heading towards, collapse, was to save jobs, was to protect depositors. You have to interpret it that way, and then you understand the public good aspect of the decision that was taken. Because we came in there to save a situation, and that situation saved jobs. It saved the depositors from losing their funds.